Hey traders, happy Monday. Welcome to Charts and Coffee for Monday the 25th. Super excited. It's a Monday. Markets are back open. I used to always joke with my husband that I felt like a dragon slayer with no dragons on the weekend. And 30 plus years later, I still do, although I'm getting better at enjoying weekends, but Mondays are always great. And this Monday, especially because today is the first of either 2 or 4 sessions where we're going to be doing our live trading starting today at 2 p.m., which means you still have time to check that out and join me at 2 today. So you get my live trading alerts for the next 2 or 4 weeks. And speaking of analysis and alerts, let's jump into your questions. All right. So jumping into the questions right off the bat, we've got you're nervous for live trading. Oh gosh, don't be, Michael. Oh gosh, don't be. Think of live trading as Charts and Coffee on steroids. We're going to be taking plenty of questions. We're going to be setting up trades, and remember, live trading doesn't mean we're just constantly on the keyboard slinging trades. Remember, we're going to be planning trades out, setting up levels, placing alerts together. You're going to find it's actually pretty peaceful. It's not anything frantic at all. I don't believe good trading should be frantic in any way. You're going to find that you don't need to have, full tilt, high adrenaline. This is not a bungee jump. So don't be. And as far as the login goes, yeah, just log in through the same room that we did the class in. You'll be all set. All right, Kevin, good morning. Could I please take a look at a pullback in AA? Sure. All right, let's dive in here. I get a couple of questions about the charts that I use in Charts and Coffee and also in the different rooms. I use, for the majority of the analysis, I probably use TradingView more than ever because it's broker agnostic, right? Whether you have an account with Tasty, TradeStation, Thinkorswim, or wherever, it's broker agnostic. It's fantastic on the phone, and it has excellent alerts. So I'm a big fan of the platform, and that's what you see probably most of the time when I'm either in a room. If not, I'll toggle between Thinkorswim and TradeStation. Those are the 3 that I use the most. And so we're on TradingView right now. Anyway, AA. Okay, so if I'm looking into AA, structure before strategy. Where are my drawing tools? Let's get some drawing going on here. Channel my inner John Madden. Some good football games yesterday. So here's the structure. Now, just sort of top to bottom, of course, we've got our wave and grab candles. We've got our propulsion. We've got our V-score here. Structure, that's it right there. How am I looking at structure? Those 2 rows of lines. What are those 2 rows of lines measuring? 8, 13, 21. And what makes these a little bit different is 34 separate. And that's the lower row as opposed to the upper row. Okay, so having said that, structure first, I would stick with the long side. That's what I see. Experience has taught me, even when we get a little choppy, as we have, sticking with the trend that was is typically going to serve us, not presuming, assuming, or any of those U's that the market's going to reverse. This is a very unusual pattern. U's or V tops are not really natural in the market. They happen, but they're usually going to be triggered by a much larger force like the Federal Reserve, like geopolitics, right? Things that are much more severe in terms of changing a broader spectrum of psychology. If not, continuation is usually what we're going to see. So let's just go with the probability, right? That's all we can do. So I would say focus on the pullback, but be a little bit more conservative about it. And I would take the range. I would recommend taking the range clear down to the 55 because we can see it's been in play. I would personally also love to see a nice Darvis signal again, which means you'll be playing the pattern really with a minor low, but I'd keep an eye on that. That's the way I would look at this in terms of the current behavior and how we could tackle this market that's a little bit more volatile, right? On the pullbacks. All right, so next up is hey there, AJ. I was curious if I could explain how a ticker gets on the do not watch list. AJ, I will tell you the best. So there's a number of reasons I can put something on a do not watch list, but the number one reason, the one that has been the needle mover for me, is if it is a symbol that I just lost in. Doesn't mean that it was a bad loss. Doesn't mean that it wasn't a loss that was part of our stop loss plan, but a symbol that I just lost in immediately kind of goes into timeout. That's the best use of a do not watch list, because I don't know if it's a gene. I don't know what synapses fire, but there's something about that revenge trade. That symbol took my money, and I'm going to get my money back from that symbol. And I find that some of my worst trades will emanate from that. And so if a trade gets stopped out, right to the do not watch list. So hope that makes sense and hope that helps. All right. Can we take a look at hey there, 1K. Can we take a look at CSX? Sure. Cool move. Clearly bullish. Not much I can do up here. Again, it's so I think I know what you want to do with it. I don't know if you want to fade it or not. Let me know. But fade is not going to work. It's green over green. Very fresh. Big launch higher earnings. At this point, I need a pullback. That's my strike zone. Maybe a gap close. So in that area, need a little bit of movement lower. And that would be the zone that I am looking for. So if I am thinking of the way in which I tackle the markets, none of what we do should be built on this notion that we know it's going to happen. Newsflash, we don't. I think a lot of you know that. And it's something that I had to accept very early on in my career. We don't know what's going to happen, but we do know what we would like to do if certain signals fire off on our secret squiggles, our indicators. We do know what we want to do if certain price levels are reached. So it's really bracing ourselves for if the market gets to a certain level, or if we get a certain signal, what then can we do? And so I look at it, good old Ted. We know our zone, and I'm just going to sit there looking and waiting until I see exactly what it is that we can react to. So thanks for the question. And there is absolutely time to join me for the live trading today at 2 p.m. Eastern. Really looking forward to it. All right. So what do I think about SPX options trading 24/5 starting the 21st? What do I think? I think that, so Mustang, you bring up a great question. I think for stock traders and for stock options traders, this is pretty exciting stuff. For futures traders, it's sort of welcome to the party. So what do I think? I think it depends on where we individually are sitting. If we're coming from a futures or Forex background, it's kind of like, oh, finally, right? Welcome to the party. Doors open. Welcome to the 24/5 party. If you're a stock trader, this is pretty exciting. What I'll tell you, as being a futures and Forex trader for many decades, is we have to watch the volume. Because, as I like to remind my Forex traders, those traders that have been living in a 24-hour market for many, many, many years, not all hours of the day are created equal in terms of volume and volatility. So I think that's probably the first thing that anyone venturing into a 24-hour market is going to have to consider. Does 8 a.m. look like 8 p.m.? Does 10 a.m. look like 10 p.m.? And you're going to find probably not. You're going to see different volatility, different volume, different psychology, different financial centers expressing their opinion, but very exciting stuff. I'm with you. Super exciting. I love your name, by the way, Mustang. We have a few of them here in the Horner household. All right. The car, not the horse. Horses scare the heck out of me. Michael Bailey asks, any interest in getting into X? Yeah, we talked about X last week, so I'm thankful you brought it up. If I'm looking at X, I'm really tempted to focus on the short side of X. It's battling it out right now with the 200 propulsion in the first of the year anchored VWAP. That's what I see happening on the charts right now. And then we have to think about what's happening in SLX and even in XME. SLX is what I would root as far as the boat tide relationship. That's where I would root that X into. Um, so the bigger issue is that, and I think we were going back and forth on the, I know for whatever reason, there were a number of websites that I used that had the incorrect earnings date, which is, I can't remember the last time that's ever happened. But I will personally say, with earnings just 3 days away, let's wait for a post earnings reaction. I very, very seldom want to play the shock wave of the earnings. I don't mind playing to earnings, not through, and I don't mind playing post earnings, but that little window, really of that single, call it a half a session, that little window where the volatility for the event is hitting, that's a very binary scratch off ticket type approach that I personally do not like. So I'll play to, I'll play post, but I won't play through. So in this case, let's see where we end up immediately after earnings and whether or not that's in a zone we can do something with. So I don't want to, and by the way, remember that if I'm, and the second part of your question, Michael, is a great one. So this is the way I look at anything like the infrastructure bill or anything that is on the news that we know is coming, broadly known knowledge, right? If you and I are talking about it, Michael, that means that institutional money, retail money, just money in general, has likely already placed their bets, gone to the window, they've picked their horse, and it's therefore been discounted. Having been discounted now, that means a lot of the sentiment about, in this case, the infrastructure bill getting passed, that's already in the markets. The bulk of that is very likely in the market, which means whatever we think we know now, what the infrastructure bill is going to benefit, how much money is going into that corner of the market, all those things are pretty well known. And therefore, the bets on that happening are already in. What would be a surprise is where the movement could be. That's why, by the way, what we just described there, that little scenario of, okay, we know this is going to happen, so how would we make our trades based on what we know? That's buy the rumor, sell the news. Buy the rumor, whatever's happening with the bill, the amount, who's going to benefit. Sell the news is, okay, well, now we got what we presumed was going to happen. We'll take profit on the movement that was happening because of that assumption. So be careful of a buy the rumor, sell the news, where how many times have we gotten in, and we've all done this, right? We've gotten into a position and we go, but wait a minute, I thought X was going to happen and X happened. And that was supposedly bullish. How come the markets are selling off? Because everybody already put that position in. Likely the market already made a significant move with that assumption being baked into the cake. We got what we wanted, and there's the let off, and that's the buy the rumor, sell the news. So be careful with stuff like that, because we're clearly not talking about high level, high security clearance information. It's out there. It's likely been discounted. And I will say, it's pretty surprising how little some of the stocks that we would believe and sectors that we believe should benefit a lot more from this infrastructure bill are moving very lethargically or nearly in the opposite direction, which tells us the people who know, and I don't include myself in that group, but the people who know clearly see something we don't. So be really careful. Be really careful. Hey there, Kalwan. I appreciate that. I do this for two reasons. One, I love getting these questions, this kind of rapid fire Q&A. And two, it's honestly, as much as I call this charts and coffee, getting together with you all, having a little mastermind 20 minutes before the market, 10 minutes before the market, the bell rings. It's better than coffee, right? It's better than coffee for me. I appreciate that, Kalwan. Chris, looking for a breakout in MS. So if you've been watching this show for a while, Chris, you know that we've got to, at least take a quick peek at XLF. I like the pond. you are fishing in. Now, the question then becomes, do we like this particular name? Do we like the group? Do we like this name? So if I'm looking at Morgan, it's not tracking wonderfully with XLF, which means it has to play, essentially, it has to play catch up, right? So in terms of other names that are already moving with XLF, or I will also say, let's say you don't want to broadly make, let's say you want to broadly make a bet on this overall tide moving higher. You know, some of you might remember from the my mastery in the options room, we put a long position on in KRE in the regional banks, which has been in Fuego too, like XLF has been. So the question is, of all the names that I could look at, which one seems to be tracking in a way that's indicative of what's happening at XLF? JP Morgan is, Bank of America is, Wells Fargo, pretty decent. So then we're asking ourselves, if this tide keeps moving up, is there something that might have to play catch up? And that's where Morgan at about 3.25% of the XLF seems to be kind of stuck a little bit. I'm not going to bet against it. Chances are, if we can continue moving with these blue grab candles, this is going to be a breakout scenario. So the bet on Morgan is it hasn't really largely been participating with the XLF, has it? So then the idea is, well, if the tide's rising, and this is a boat within that tide, it probably too will rise. And it's a little bit of a laggard. So the danger is if XLF suddenly pulls back dramatically, Morgan, which is already kind of wobbly, right, just not participating, could sell off. However, that being said, I'd look for a momentum breakout. 4 blue grab candles in a row, compressed market. I like this for a potential momentum breakout. That's what I would keep an eye on for Morgan. All right, thank you. It was a rough day as a Jets fan, and while we're looking at, yeah, Hal, that was a rough game. Was it Patriots? Yeah, that was rough. Although Max coming into his own, you know, I'm so happy for Darnold. I like the new coach for the Jets. I think you guys have a good coach. I'm happy for Darnold. What a crazy ride he's been on. He's doing pretty well, but hang in there. I think a lot of people forget that before the Patriots had their epic run, they were pretty much at the bottom of the division for probably 10 years. Yeah, every team gets its time in the sun. Look at the Bengals. That should give Jets fans hope, you know, turn around. Anyway, well, we're talking about JETS. Let's talk about the Jets ETF. It looked like it wanted to organize into an uptrend. It looked like it was ready to start moving higher. I just want to point this out. The structure, here's your grab candle saying, look, can we go? Can we go? Can we get a little aggressive? Yeah, but this is where it was not in sync with that structure of the 8, 13, 21, 34. And yeah, if you want to get aggressive, probably had one decent trade out of that. And then it's rolled back over. However, it doesn't mean that we can't buy. What I would say is if you are looking at Jets, you probably want to look at some individual stocks that might be a little stronger than the ETF. But that could be a really nice oversold zone. So how would I define an oversold zone? Chop is where the language of overbought and oversold is valid. And then use a ready aim fire. I've been using a slow stochastic for decades. It's an oscillator, right? Oscillators help us measure markets that are oscillating. What's a market that is oscillating? It's not in a trend, right? So you want to look at markets that are oscillating. They're stuck in a range, and they're going back and forth between overbought and oversold. And my favorite's been a slow stochastic. And what I'll usually do, you might say, Ron, that looks like a funny slow stochastic. How come there's only one line? Because I actually just used a D, which is a smooth, right? And it just kind of cleans it all up. 2080, use a smooth. We'll be talking plenty about this in the live trading, but if anyone's seen me use these before, you know it's in that yellow underlying market environment. That's where you want to be with that. Upstart, if it's going to pull back, and I think it would be great, um, let's get another pullback, maybe to the 21. That would be fairly aggressive. The wave would be fantastic. It's a double green. It's definitely, it's definitely something that a lot of folks are talking about. That infamous CNBC interview with someone who was talking up Upstart and then actually did not know what it was. Hey, I've been there. I've been there. I just would have said, I don't care. It's got good volume and it's heading higher. It's I'm buying I'm buying it because of that. But anyways, gosh, I felt bad for that guy. But anyway, I like the dip. I like the dip. And do I look? I remember telling the story. I traded euro dollars, an interest rate contract and futures for years, not even knowing what they were. Didn't even know. Had volume and had good structure. I'll play it. I'll play it. But anyways, I would wait for the pullback between the 21 and the wave. All right. And just like that, we are out of time. Thank you as always for being a part of Charts and Coffee. I will see you all tomorrow, same time, same station. And I will see those of you for live trading. You can join me today at 2:00, simplertrading.com/extract. Let's extract some profits from this market over the next few weeks. Be good to each other. I'll talk with you soon.